Welcome to today's Explainer, where we're breaking down the historic June 2026 SpaceX IPO. We are stripping away all the noise and the hype today to look strictly at the numbers and the market reactions. Our goal here? To help you, especially if you are a new investor, weigh the massive, almost sci-fi growth potential of this company against its very stark financial realities. So, let's get right into it. We've got to start with the sheer, undeniable spectacle of this debut. SpaceX shares opened at $150, which was already well above their $135 target, and then they just rocketed 19% to close at $161. That price action instantly minted a staggering $2.1 trillion market cap on day one. And honestly, it pushed even higher in after-hours trading, officially making SpaceX the sixth most valuable U.S. company right out of the gate. And if you really want to understand the sheer retail frenzy we just witnessed, just look at the trading volume. Over 500 million shares changed hands. To put that in perspective, in dollar terms, that is a $33 billion tidal wave that easily dwarfed heavyweights like the QQQ and SPY ETFs. It nearly broke Facebook's all-time first-day record. The Nasdaq president even noted that around $15 billion of the IPO allocation went straight to retail, which is just massively larger than what we see in most IPOs. Here is how we'll structure our analysis today. 1. The trillion-dollar debut. 2. Fueling long-term growth. 3. The profitability paradox. 4. Valuations, risks, and realities. And 5. The investor's final frontier. All right, let's jump into Section 1, the trillion-dollar debut. As an investor looking at this, you've got to step back and look at it holistically. You essentially have to balance the incredible growth drivers on one side of the scale, like their massive pivot to becoming an AI hyperscaler, integrating their XAI acquisition, and their Starlink profit engine. But you absolutely have to weigh that against some severe risk factors on the other side. And we're talking about decades of accumulated financial losses, extreme valuation multiples, and mounting legal and regulatory headwinds. Moving right along to Section 2, fueling long-term growth. So the capital raised from this IPO is intended to fund a significant, massive growth phase. Because this isn't just about space travel anymore, right? It's about computing. SpaceX aims to become a major AI hyperscaler, meaning they literally want to be the backbone of global computing. They aren't just deploying 100,000 satellites for communications, they are building AI data centers in space. By bringing the xAI's Grok models in-house and partnering with Tesla on that macro-hard AI platform, they're executing a massive technological pivot from a hardware rocket company to an all-encompassing tech ecosystem. Add in the launch of their AI-1 satellites next year and a $60 billion option to acquire Cursor, and you can see exactly how bold their ambition really is. Which brings us to Section 3, the profitability paradox. Elon Musk claims the company has actually been cash flow positive since around 2015. Now, on the surface, that sounds incredibly promising for a business with this kind of immense scale, massive capital expenditure, and wild ambition. But, well, that optimism kind of hits a brick wall when you zoom out and look at their accumulated losses. Since it was founded back in 2002, SpaceX has burned through a staggering $41.3 billion. That is an immense mountain of historical debt that you, as a new retail investor, are effectively inheriting on day one. So, where is the actual money coming from today? Believe it or not, right now, the Starlink division, which has been driven by intense subscriber growth, is the only part of this massive enterprise that's actually turning a profit. The rockets, the Mars ambitions, the orbital data centers, those are financial black holes right now. Starlink is basically the lone financial engine keeping the lights on for the whole operation. Let's dig deeper into that in Section 4, valuations, risks, and realities. The retail excitement we saw on day one, yeah, that is facing some intense skepticism from institutional analysts. For instance, CFRA slapped a sell rating on the stock right out of the gate, setting a price target of just $115. They explicitly called the current multi-trillion-dollar valuation borderline comical. And it's not just CFRA. Renowned NYU valuation expert Oswath Damodaran weighed in too. You'll often hear the bulls talk about how space and AI are going to create a $28.5 trillion total addressable market, which is essentially the maximum revenue opportunity they think is available. But Damodaran flatly dismissed that massive projection as a complete hallucination. Look, when leading valuation experts are tossing around words like comical and hallucination, it's a stark reminder to look really closely at the math behind the hype. Adding some serious gravity to the bear case are the regulatory headwinds. SpaceX has already had to set aside $530 million just to handle lawsuits and probes over Grok's generative AI deepfakes. Furthermore, with this IPO suddenly making Elon Musk a paper trillionaire, we're seeing renewed political calls for wealth taxes. Regardless of where you fall on the political spectrum, as an investor, you have to impartially factor in how these regulatory crosshairs might impact the company's operational freedom and, ultimately, its bottom line.
And finally, Section 5, the investor's final frontier.
The overall market is reacting wildly to this new behemoth. ETF issuers have already filed for over 25 SpaceX-linked ETFs, many of them highly leveraged, just trying to capture this momentum. But it's fascinating to look at the broader ecosystem. Competing space-linked stocks like Rocket Lab, Redwire, and Virgin Galactic actually plummeted. SpaceX is kind of acting like a financial black hole here, sucking capital out of the broader space sector and pulling it headlong toward its own IPO. SpaceX President Gwynne Shotwell addressed this dynamic directly, stating that they are looking for long-term holders. She emphasized that they're an infrastructure company built for the long haul, not just some vehicle for quick first-day cash grab. They fully acknowledge the threats ahead, even the geopolitical ones, but insist they are just going to keep forging ahead. Which brings us to the ultimate question for your own portfolio strategy. Knowing the massive AI hyperscaler growth potential and the undeniable success of Starlink, but balancing that against those comical valuation warnings, the regulatory targets on their back, and the $41 billion in accumulated historical losses, you have to ask yourself, is SpaceX a foundational, long-term cornerstone for you, or are you just buying a ticket to a high-risk, trillion-dollar spectacle? That is the frontier you have to navigate. Thanks so much for joining me on today's Explainer.